Hello again, everyone. Welcome to the program. I'm your host, as always, Jeff, here at the Economic Prepper. And I wanted to jump right into a topic that's been top of mind for a lot of people recently, which is the income tax. Now, I'm not going to go into the history of it, how it came to be, whether it's legitimate or not. That's not what we're going to talk about. We're going to try and simplify the discussion to, can they really get rid of the income tax? And what would that mean? And how could we possibly ever balance the budget? Well, I'm going to talk about that, go over my interpretation, my suggestions, and I got some slides and I got some references too. So all that'll be in the description. But before I get into it, if you like this kind of content, I know this video might be a little bit longer than usual, but if you liked it, and you like this sort of thing, please give me a like, share, subscribe, share this out, make it go viral, whatever you want to do with this video. I really appreciate it. But thank you for taking the time to watch this. But let's just jump right in. I've got slides, I've got links, I've got lots to share. Let me jump right in. So first off, an overview. Okay, so let me share my screen. First off, can it be done? All right, this is the topics we're going to be hitting on today. So first, we're going to look at budgets in general, try and keep it nice and simple. The U.S. budget simplified. How much income does the U.S. get, and where does it come from? What if there's no income tax? What if that happens? The effects of the Department of, not Dogecoin. Okay, this is a different Doge. If you haven't heard this acronym before. This is Elon Musk being asked or tasked by potentially the next administration saying, can you do some government efficiency? So he's going to be the head of the Department of Government Efficiency. That's what D.O.G.E. now stands for. It's the joke is not lost upon Elon or anyone else. So, and then lastly, filling in the gaps, because there will be some gaps. And how do we get this right? So let's look at the first thing. So let's talk about budgeting. How do we do a budget? How do we even look at budget? Like this should be pretty simple, right? Everybody probably in the last 4 or 5 years, if they haven't done it sooner, has had to look at their bills and had to look at their income and say, what do I do? How do I make sure that I've got enough money at the end of the month and not the opposite? So first thing you want to do is you look at your income sources, you look at your expenses, and you add them up. You the plus sign for the income, the minus sign for the expense, and there's your total. Hopefully you have a positive number at the end of the month. It's getting harder and harder to do. And for the U.S. government, they gave up on that. So let's see. So we're going to go into the simplified U.S. budget. So before I do that, I'm going to go and I'm going to talk about an article over from Zero Hedge. And again, these links are all going to be in the description. So I highlighted some parts. There's a lot in here. I'm just going to talk about the highlights so we can touch on things. So this is talking about slicing and dicing the federal income tax. So far, 47, I'm going to call him that, or Donald. The Donald has proposed to extend the lower rates, family tax credits, exempt tips, Social Security benefits, and overtime wages from federal income tax. And he's talked about other things too. So those items alone would generate a revenue loss of $9 trillion over the next decade. But he also proposed no income tax for firefighters, police officers, military personnel, and veterans. So it's going to add up. So you're looking at about $11.5 trillion over the next 10-year budget window. Now, that's a long time to look, but they do have to look at those things. Scrolling down here. So, and I'm going to get into tariffs. Now, this article mentions tariffs. I'm going to come back to that. Let's stick to the income for right now, okay? So it starts to talk about GDP, which is the gross domestic product of the United States, and the expenses of the U.S. So we talked about the income. Let's look. What I did was I pulled up the information from 2023. That's tariffs, sorry. I put up the information from Wikipedia on the budget for 2023. And then I zoomed in on this picture, which is right here. Okay. Let me double check that that's working. It is working good. All right. So I took these numbers about what is mandatory, what's discretionary, what's the net interest, and then what the revenue is. So we're starting with the revenue, keeping this nice and simple, going back to our budget. All right. We wanted to look at, let's see, let's go back to here. All right, so I'm going to go. Let's backtrack. Let's start with the income. Okay, I don't know why did it jump like that? That's weird. Okay, so the income is 2.2 trillion from income tax, and that's half of the income, and 2.2 from other taxes. Hopefully things line up. It's had some issues with the slides. We'll see. So here's the tabs did not work out. Okay, sorry about that, but we will move on. So there's your income. So back to that sheet that I was just looking at. So let's add to the stage. This is a blow up of this image here, and In the bottom left corner, you got total revenues, and it's hard to see, but you can, it's basically 50%. Let's see, can I blow it up? Let's see, there we go. So we got 2.2, this is for 2023. 4.4 trillion is your revenue, 2.2 is income tax. So if we just do it that way, go back to this, we did 4.4 is your income, 2.2 is the income tax, or 50%. So there's other taxes of 2.2. So now you want to consider back to this image again, right? We're back here again. You got your revenue that's going out, or what you have to spend. You get your mandatory, discretionary, and your net interest. So mandatory are things like Social Security and Medicare, Medicaid, and other programs that are just locked in. You got to pay them every year, no matter what. Discretionary is broken into defense and non-defense, and then there's the interest on the debt. Okay, so I'm going to jump over to the slides once again. So here we go. I'm going to advance them. Sorry, but the margin's not lining up. It's a StreamYard Google thing. I don't know. We'll just move on. So mandatory, 3.8 trillion. Discretionary, like military, 1.7 trillion. And interest is 0.6 trillion. That's $600 billion. So we're all going to work in trillions. And I'm going to round to the 10th of trillions. These are big, big numbers. Hard to even think about. But the bottom line here is the subtotal of 6.1 trillion for 2023. That's what they spent. The subtotal of income is 4.4. So that's a gap, right? They have a deficit. 4.4 minus 6.1, that's 1.7 trillion of a deficit. That's the annual deficit, and that adds to the national debt. All right. Hopefully that's explained. So now we've got a deficit. We have a budget where we spend more than we earn. So how are we going to fix this? And how are we going to cut the income taxes and make this work? So can we cut the income tax? Can we spend less than our discretionary? Can we increase our income, and can we improve on our interest? Those are the four things I'm going to look at. So the first thing I'm going to look at, simplify income and spending, namely the discretionary spending. So first off, the income spending. Sorry, this didn't line up well. So the income, okay, so first off, you get the U.S. government income, okay? And I'm sorry for the, no, I know, this should be zero. And so I cut the income tax to zero. No. Here we go. What if there's no income tax? I'm sorry. So income tax, and I'm sorry it's behind the arrow, but I now dropped the income tax to zero. So now the subtotal is 2.2 instead of 4.4. So that's all I changed. So you can see the deficit went up by 2.2 trillion. So now instead of 1.7, it's 3.9. That's bad. It's a 2.2 net change. It's in the red. It's bad. Because we just scratched off income tax. So how are we going to fix that? Well, then we go into what if, the item number 4 here. So, or 5, effects of the D.O.G.E cuts. Okay. What if there are D.O.G.E cuts? What if we do that? Well, just looking at this, we got 1.7 trillion of discretionary. I said that the mandatory can't be cut, and they're not going to mess with interest. I'm just trying to keep this very simple and basic to see if we can get to a number that possibly even works. So we had a discretionary of 1.7 trillion. Can we spend less? If D.O.G.E takes a 33% cut, and now where did I get 33% cut? So I'm going to go back over to this window, and I'm going to talk about Howard Lutnick for a second. Now, Howard Lutnick gave a very interesting speech, and I talked about this on a different video, which I think is here. Nope, it's the new Tether, which I talked about that on that video. And that link will be in the description as well, probably up in the corner too. But Howard Lutnick runs Cantor Fitzgerald, and he's on Donald's transition team. And he also introduced Elon at Madison Square Garden. So he asked in this video, I'll show this video as well. It's a short video, but at about a minute in, I'm not going to play it for copyright rules and all that other stuff, but he asked Elon, of the bloated budget for 2024, about how much do you think you can cut? Now, he said a number of over 7 trillion. Elon said about 2 trillion. So I did the math, and that's like 30%, maybe a third. So what I did was going back to the slides once again. I took D.O.G.E and I took a 33% cut, but only of the discretionary. So now if I go back, it was 1.7. Now I'm cutting to 1.0. So now instead of 6.1, it's 5.4. So now we add it up again, and we have a net change of the deficit's down minus 3.2. But remember, 2.2 of that is because we took away the income tax. So we still have a 1.5 trillion deficit for annual spending for 2023, 2024, however you want to cut it. So what are we going to do? Okay, so now we're looking at the orange arrows now. Can we increase our income? All right, that's the next one. And then so now we're going to look at how do we fill in those gaps, right? We've got gaps in income. We don't have enough coming in. So just going back, just let me drop out of here for a second. So going back to the basic budget. If you have more money going out the door each month than you have coming in, you got to find more ways to get income. Pretty simple. So if you have a household, let's just say, like going back to the U.S. government, you cut half of your income. Say you have two incomes in your household, and one of you loses your job. So now you're at 50%. You got to look at where you can cut, and also you got to try to find another job to fix that gap in income. So that's where we're going to go now. So we're going to go back to here. Okay, so going back to the other articles, sorry for the bouncing around here, but I'm going to go back to the original article, Zero Hedge, and we're going to scroll down about halfway through, and we're going to talk about the tariffs. Now, the proposed tariffs by the next administration, we went through the part about the gap of spending because of the income tax. But what are the tariffs going to do? So the revenue tariffs, based on this article, while it did meet the income gaps in the federal government in the 1870, 1900 range, we'll get back to that in 1 second. We'll get back to this 1 second in a minute, but I wanted to come up with what's the number that this is going to propose. So the math works out such that the proposed revenue tariffs would generate about $9 trillion the next decade, or about 80% of the 11 trillion revenue lost. Now that's about right. So let's just say the tariffs are roughly about $1 trillion a year that we can add back to the income. Now, before I get back to the chart, I want to talk about tariffs for a minute, because if I scroll back up here, the revenue of the 20th century or the late 19th century, Donald likes to talk about this because there was no income tax at this time, and most of the federal government was paid for by tariffs. In fact, from 1792 to 1860, 80 to 95% of the federal government was paid for by tariffs. Now, I got into I saw a post by Peter Schiff and I responded to him, but that's where I shared these images. Let me pull them up. And so here's the first one. And this is from, if you go into the tariffs page on Wikipedia and click on US, I think it's US tariffs. It'll bring you to the US tariffs. And so if you go to the history of tariffs in the United States, and you scroll down and get to this picture right here. Now I've blown that up and I've also sliced it a little bit so we can put it on the screen better. So this is federal revenue by type. And this is in percent of GDP. GDP, again, is gross domestic product. It's how much the country produces. You can't tax 100%. Otherwise, why would you produce? Plus, companies are making a portion of the production as a profit. So you can only really expect to get a portion of it. So, and generally speaking, there are three types of revenue for the U.S. income, for income. And you can see the federal revenue by type. Before 1913, okay, it was basically all tariffs, but that was only roughly 2 or 3% of the GDP. Now, I don't argue that point whatsoever. Now, after 1913, the income tax, which is red here, slowly started to increase. And then in World War I, it increased from a couple percent to almost 5% and settled back down about where tariffs were. But the tariffs didn't change, right? Tariffs were just added on. So now here you have a federal government for about 20-ish years, from 1920 to 1940, with about double their income on an annual basis that they can spend. Of course, spending is going to go up. Now, World War II enters into the picture. Bretton Woods happens in 1944, which is a meeting that put the U.S. dollar as the Federal Reserve note. And now the U.S. government decided that they were going to share the burden of rebuilding the rest of the world after World War II, and they took on more income tax. So you can see income tax jumped way up into 10 to 15% and settled into about 10% of GDP. Now, you still had payroll taxes and tariffs, but tariffs got to be less and less of a portion of GDP. The point I'm trying to make with this is simple. It's basically three segments. Segment 1 before 1913, segment 2 before World War II, and segment 3. Okay. Basically, my point of contention is a simple one, which is that the U.S. government has a spending problem, not an income problem. The problem is they've grown to spend all their programs to a point where, back to that article, which I'll jump to in a second, but it's basically almost a quarter of their GDP. So I'll go back to that and share that. So there, this view. So you could see in the zero heads highlighted in purple that today, of course, all the spending accounts for about 25% of GDP. That is much higher than back in the 1870 to 1900 time frame, where tariffs footed the bill for the federal government. So now let's go back, settle back down, and now we have a tariff revenue estimate. It's about $1 trillion a year. So we're going to put that back in our budget, and we're going to try and figure out that income tax, the income tax removal, tariff adding, and whether we have a balanced budget or not. So let's go ahead and advance the slide here. So you got your income. 2.2 with the income taxes being 0. Fortunately, this is lining up. Now, of course, now made me a liar. Jump to the next slide and everything's all wonky, but bear with me. So 2.2 is your income. Your other income is about $1 trillion from tariffs. So now your new subtotal of income is 3.2 trillion. So now you plug these numbers in. Here's the old numbers. We were at 4.4. This was 2.2. Sorry for this being covered. 2.2 for income taxes, 2.2 for the other taxes. So you had 4.4. So these are old numbers these are the original figures where we started at negative 1.7 trillion of a budget debt, a budget deficit each owned for 2023. Now, if you revise it, you take out the income tax, and that's 0. So now you're at 2.2. That was what our original change was, and we let Elon make some cuts, and we got to 1.5 being negative, which was 1.5 worse than where we were. So now we needed some help. So we needed that, we needed those tariffs. So those tariffs hop in. They add another $1 trillion of income. So now instead of 1.5 of net change of negative, we're down at 0.5. Still have a gap. How are we going to fix this? Okay, filling in the gaps. This is the original budget again, or this is where we're $500 billion short of balancing it. Now we want to not only balance, but we'd like to get a surplus so we can start fixing things. So what are we going to do? All right, can we increase the income? Can we improve on the interest? Those are the two things we're going to look at now. So now we go back to there's our income, and we get the tariffs in. Can we get some additional income? So again, I'm so annoyed that the margins are off, but okay, we're 3.2 trillion of income. Additional income. This is where crypto comes to the rescue. Okay, so let me jump to the other. I'm going to jump to the other window here, and I'm going to talk about Howard one more time, and I'm going to talk about his discussion, and I'm going to share this link. Okay, so there's Howard talking at Bitcoin 2024. And he was talking about Bitcoin, and he was also talking about lending, and he was talking about fixing the dollar and creating a digital dollar through working with Tether. Now, I know that a lot of people have thought Tether is bad. And again, I've got a video on Tether, which I think is right here. So I'll share that link in the description as well. But the Tether that or back in the day that we're waiting, that's just for those of you who've been around crypto for a long time, that Tether was a ticking time bomb because they had a lot of bad paper backing up their digital dollars. Howard saw all this, and that's in this video as well from Bitcoin 2024. Howard saw this problem and said, you guys got to fix your debt problem, and that can help you out. So he's moving them from bad debt to U.S. Treasuries. So his idea is that he wants to help people outside of the U.S. move into the U.S. dollar through some form of digital app or whatever. But basically that will help sell U.S. Treasuries. And selling U.S. Treasuries improves our bottom line. So I'm going to go back and I'm going to talk about these here. So I mentioned, and this is in the video, my idea, which I think he hinted at Bitcoin 2024, was that he was going to have Treasury or bond, U.S. Treasuries, U.S. bonds, digital sales. And the target market of this is outside the U.S. You can, of course, U.S. can buy it. Anybody can buy it if you want. But rather than holding, this is really going to appeal to people outside of the U.S. So Howard spoke about that. And there's the link to the video. And we're going to talk about something called M2. This is the global monetary supply. So let me pull up one more link. I told you there were a lot of links in this video. All right, so I think it's this page. Let me share that. There we go. All right. So another article. This is from Money Digest. And again, the links will all be in the description. But this is how much money is there in the world? All kinds of numbers out here. There are three things. There's M0, M1, and M2. That's how they kind of classify different categories of money. Okay. Now, they said estimates are approximately $83 trillion floating around the globe in either cash, bank accounts, or other instruments that can be converted quickly into cash, like a CD. That is M2. Okay. So, going through, I'll point all this. So the M2 money supply, which includes cash, checking, and savings, fairly easily converted into cash. Good example is seed deposit, CDs. So global M2 is estimated to be $82.6 trillion. In the US, M2 stands at about $20.8 trillion. Okay, so I take those two numbers, jump back to my slides, and say, let's look at M2. Okay, so again, this is the things that are basically cash for most everyone around the globe. And there's the story. Put the link in there. Again, that'll be in the description. So those alignments killing me. All right, M2 in the US is about $20 trillion. Global M2 is about 83 trillion. Do the math, you get non-US, you have just about $62 trillion. And if you want to add an additional income source, you can take the Treasury, then issue more US Treasuries. Sell those to people outside of the US. And the idea is pretty simple. You have people like, I saw several interviews with Howard Lutnick, and he said, like, think about people in, say, let me just get out of here and talk. Think about people in, say, Greece, Argentina, Venezuela, with a bad currency. It's a bad currency. It depreciates way faster than the US dollar. Now, we know the US dollar is basically the cleanest shirt in the dirty laundry hamper. It's the worst fiat. It's the best fiat, in the worst category of currency there is. But for people that are in Venezuela or Greece, or let's just take El Salvador 5 years ago, they couldn't get dollars, but yet we were printing them like crazy to try and fix the fact that we closed everything down. Imagine you're in a country where your currency is eroding. Prices are going up weekly. You would love to get out of your peso, your euro, your yen, won, whatever it is, whatever the currency is, like the Zimbabwe dollar, which is a bad example because they're backed by gold, but you get the idea. Let's go with the Venezuelan peso. I think that's what they use. Correct me in the comments if I'm wrong. But let's say you got paid $100 worth of pesos this month. Next month, they might only be worth $80. But if you converted them to dollars in the first place, maybe you would save some of your purchasing power. So this idea of selling U.S. Treasuries to people that have a hard time, like the unbanked, people that can't get access to buying U.S. Treasuries or getting to a U.S. bank. But you say, hey, you've got $100 worth of pesos. Would you like to convert that into 99 US dollars? And there's a small fee, of course, like $1. And they say, sure, because now I'm going to save my money in better currency. That $99 may only buy $80 worth of stuff in the US in 2 years, but it might only buy $40 worth of stuff in my current country. So I need to get out of my currency. So if you go back now, let's go back to the slides, and then you'll get an idea about what I'm talking about. So I think we're here. There we go. So the font's a little small on the slide, but we'll roll with it. So we got, let's just jump over here. The goal is to convert the currency for people, about 5% of the non-US M2 supply into US dollars or USDT. And if you did that, you would have 5% of, call it 62 trillion. That's, I'm going to round it to $3.1 trillion. And so how is this a win-win? First off, the person who has a bad currency gets into a better fiat currency, not the greatest, but now he has opportunity to get into US dollars instead of his local currency. That's appealing because that saves him purchasing power over time. Maybe he can't buy Bitcoin. Maybe he doesn't want to buy Bitcoin. Maybe he wants to be mostly all cash. You get the idea. So he does that. Now, if enough people do that, now all of a sudden, all this currency all this money, this value is coming into that currency in that form. So let's just say there's an app that offers Tether. Okay, so they're buying Tether. They're digitizing their funds, and they're probably already digitized already. Now they're into the app, which keeps they're basically banked now through the app. They have USDT, which is backed by US Treasury. So now they have the power of the US dollar, which helps out the US Treasury by a couple of reasons. One, they got revenue from all the people that are buying the treasuries with this currency. Yes, they have to pay back interest, but it's much better to get more people involved in the dollar. This is very much akin to, if you've ever read the book, and I highly recommend this one, which is the Confessions of an Economic Hitman. And it's written by John. I can never remember John's last name, but it's a great book. I've read it at least once, and I always refer to it because it talks about how the U.S. pushed the dollar across the planet, especially after Bretton Woods in the 50s and 60s, where we pushed all these other countries to take out loans in the form of U.S. dollars, become indebted to the U.S., which basically puts the dollar somewhere everywhere on the planet. Now we have another opportunity to do that, but in a digital form with Tether, get more income as a result for it, and then that'll benefit our bottom line. And so you have the end user gets in a better currency, stores their wealth that way. It's all digitized anyway, and it's backed by the U.S. dollar, which is backed by the Treasury because they sold Treasury bills, which helps because other nations aren't buying our Treasuries right now. So now you've got people, you're on direct to the consumer. You've got money coming in, and your target goal is only 5% of the global M2. Now, granted, a quarter of that is the U.S., so maybe it's harder to get that. May need 10% of the rest of the world, possible, but it's an achievable goal. It's a nice goal to set. So let's go back to wrap this up here. So we got about $3.1 trillion coming in. If we get 5% of the non-U.S. M2, that's the money supply outside of the U.S. converted to a digital form to back treasuries. So now our bottom line goes from 3.2 to that. We basically doubled it. We're now adding with these new global M2 U.S. dollar bonds, which is basically selling treasury bills in a digital form. You basically double the income. So now you do the math. New subtotal 6.3. Put all the numbers back together. You go from when we last checked into this math, which I'm sorry for all the arrows and the numbers lining up. It was so pretty earlier. I'm sorry. But we were $500 billion short, and we hadn't touched the interest yet. But now we put the new numbers in. Now that income goes from 3.2 to 6.3, which is now we're at plus 2.4 trillion, which means the deficit of 1.5 is gone, and we have a surplus of nearly $1 trillion. So to summarize, before I bring it all home here, so the original deficit here was minus 1.7 trillion. The actions taken, income tax was removed, so we lost another 2.2. So now we're almost $4 trillion in the hole. That's bad. But now we add in the tariffs, that's plus 1. The Department of Government Efficiency adds it, and this is a conservative number because he's only attacking the stuff that's non-mandatory spending. So it's less than $1 trillion, but it's still significant. And then you've got, this jumps to the other side of the screen. Sorry, you've got 3.1 from the global M2 conversion to U.S. Treasuries in digital form, call it Tether. So the net result is that you've got a surplus. All right, but taking these actions, you remove the income tax, you added the tariffs, you got it more efficient, thanks to Elon and whatever he does, and then you help with Howard to convert that global money supply that's not gaining anything back to the U.S., back to the digital form of the U.S. dollars. So then with surplus of nearly $1 trillion, what can be done with this? Okay, you can invest in assets. You can buy Bitcoin, gold, oil, strategic reserves, however you want to do it, because you have a surplus. You have money to invest now. Think of your own household income. If you've got excess income, sure, you can spend some of it on yourself, but this is a government. They have to spend it on assets to make their lives better, and so that and make the budget better in the future. So these jumps, I'm sorry. So you can invest in assets. You can drive down debt. You can refinance to lower yielding U.S. bonds. That's back to the thing of like, how do we drop that interest number? You can refinance those numbers because those are the people that want to get out of their currency are probably willing to buy 1 or 2% U.S. Treasuries because it's so much better than their own currencies. So you can drop that interest rate down, and you can encourage more adoption of the digital U.S. dollar. You can go up from that 5%. So this is how. So let me conclude with talking about Howard Lutnick's plans, which I think is, how did Howard intend to suggest this? So he has an interview that he did. This is the last slide. That I'm going to share my screen one last time as I talk about this because I wanted to point out Howard's other interview that he recently did with Anthony Pompliano. So that is this one. So, and I'll leave a link to this as well. But he sat down with Pomp, and he talked about this for a while. Now, you don't need to watch the entire 2 hours, but I'd say the first hour is probably the key, and then the conclusion at the end is pretty good. But watch that. But he talks about his strategy, and I'm going to talk about this too. And so Howard's hinted at the M2 solution. He's also hinted at a few other strategies he talked about with Pomp, and he talked about how the U.S. government has the ability to take equity in companies that they help out. So imagine the U.S. offers a grant and they say, hey, we'll give $10 billion to somebody that can figure out how to make a better pen. Okay. Some company comes along, makes a better pen. They start getting profitable. Before they do, the tie-in of that grant. So they give them research money to go figure out a better pen. They give them $10 billion to go do that. That company makes a better pen, starts making money with it. But before they do, as terms of that grant, the U.S. has the option to take equity in that company. So if somebody creates a company and said, sure, I can create a better pen, give me that grant, they get that grant, but they also have to pay for that grant with a little bit of equity. So that was Howard's talking that you can take some equity if the U.S. government partners with a company, they can take some equity with it and say, put it in Social Security or put in something else that will help those budget interests go down over time. Because now, you've got alignment. You've got a company that pick a company. I'll take Penn Incorporated. Penn Incorporated, you give them $10 billion, but now they become a multi-billion-dollar company. And some of those proceeds go into fixing Social Security or something else that the U.S. government works out, but they win because they get the grant. The U.S. government wins because they get revenue because they profit share with that company. Now, some might argue that this is nationalizing companies, but it's really not because the company took on the grant in the first place. So there are lots of different ways to approach this. Howard's got several different strategies. He's got this one about lending and with using Tether. I just wanted to solve this as simple as possible. That was the job that I was given to me by one of the longtime listeners out there. And I love that question, and it made me think and do research and put all this together. So I said a lot today. What are your thoughts? Can you really get rid of the income tax? Can you really balance the budget? Is this crypto solution, one or both of them, you buying Bitcoin or getting to a surplus by leveraging global monetary supply? Is that viable? What do you think? Please share your thoughts. Leave a comment down below. Share it with Elon. I'd be great. Nothing would make me happier than Howard or Elon getting a hold of me and saying, this is an interesting idea. Let's pursue it. Hey, I'm just trying to help. Just sharing my thoughts for one guy on the internet, sharing it out to you. So leave your thoughts down below, and I'll read every comment, and I'll see you in the next video. Take care.